All right, so before every trading week, it's really interesting. I used to have a whole system where I would look at a bunch of different currency pairs and I would try to predict what's going to happen and try to do a bunch of like Sunday pre-market analysis. I'm going to show you what I actually do in practicality now. Now, the reason I do this now and have done it this way for like the past year and a half to probably almost 2 years is because I've recognized a while back, almost 2 years ago, that no matter what type of analysis you do before the market opens, it's a lot of stuff that really doesn't matter. You're really spending time doing things that don't matter. And it can even be said that you're doing those things at the cost of things that do matter, such as just waiting for a good setup to set up, per se, as it were. And whenever you are actually approaching things based on context in real time, you don't even really need to do any quote unquote pre-market analysis and go to your charts and draw all these stupid boxes and trend lines and put moving averages and these little stupid arrows that I draw. So what we're going to do instead today is we're actually going to take everything off the chart. And I'm just going to show you what I'm doing, the trades that I'm in. And then I also want to just put a little caveat right here at the beginning of this video is that at any moment, any of this can change. The market could open, and then within a few hours of the market opening today, market opens at 4 p.m., it's 8 a.m. right now. The market could open at 4 p.m. and then within a couple hours could start heavily like turning down and going downward. And it would invalidate every single thing that I have said here in the video right now. And I could close that trade at a small loss and move on to the next one. And this does not account for context. So with me making a video like this, it's more so to kind of motivate you and inspire you to actually do things that matter a little bit more and not obsess so much about like I need to do pre-market analysis every day and figure out my predictions for the week and read economic news events. None of that matters. There's just so much stuff I see people doing that's just pretty much pointless. So instead, I'm going to approach this by showing you the trades that I'm in and the trades that I might be looking to take this week. Fair enough. I'm in a USD JPY trade because price is in an uptrend and it has pulled back. So I've bought, and if price goes up to a higher high, I'll have my profit target hit. Now, if price goes down instead, there's a bunch of very nice clear zones here that I could add positions at. One of them is right there, and then a second one is right here. I have my stop loss all the way below that. Now, when you look at this is inverted risk reward, right? Well, it's no different than if I just took a trade right here, right? And then I have a stop loss there. I have the target up further high. And this would then be like a little more than a 1-to-1, right? It'd be a 1 to 1.2 or something like that. But here's the thing. If that trade stops out, but then price just starts bouncing again, I'm going to go long again, right? Like that's probably what I'm going to do, context and nuances aside, that's probably what I'm going to do. And so what is the difference between just literally waiting and saying, okay, if it goes down there and I think it's going to bounce there, okay, I was wrong about the first area. It didn't go straight up. Instead, it went against me, went to the next zone. I'm just going to add another buy position down here. That's literally what I'm going to do. Now, is this going to increase the risk? Yes. Is it more likely to bounce there than it was up here? No, not necessarily, but it's somewhere it's probably going to bounce, right? Maybe it continues into profit right now. It goes straight to the target. Maybe it goes lower first and then goes into profit. Or maybe it goes all the way down here and then bounces at that support zone. If I'm adding at these zones, right, my position average starts right here. If it goes down here and then I add right here and just kind of betting that eventually there's going to be a bounce somewhere, most likely, okay? It just positions me in a position where I know that like 95% of the time, just based on my experience, this is just my opinion, a very high percentage chance of the time, I'm going to get out of that trading outcome and either a profit or a break even, and then sometimes a small loss. And then once every now and then there will be a big loss that wipes out like 2, 3, 4, 5 trades. But that's okay if the outcome is that most of the time I'm either going to win or break even. So if I start the position up here and this little gray box represents my position average, price comes down to here and then I add, the position average moves from being right here, where it's currently shown on the chart. The position average comes to down here. So then if price just has a little bit of a bounce, I can close this at a net break even, be on to the next trade. If I add, then again, when price comes down here, I can add with just a slight multiplier. It's not technically a martingale approach because it's not doubling your bet after each subsequent losing trade. It's more like a semi kind of grid approach, right? A grid approach with context and nuance. So instead of just buying every, whatever, some people use like 50 pips or whatever. Instead of that, it's more like saying like there's the next set of support and resistance levels where price could bounce at, or at least just have a relief rally for just a moment, enough to allow me to get out of a trade at like a break even or a profitable scenario. And if the sizing is set up right before the trade, and if you're comfortable with the risk and you're comfortable with knowing what the stats are and the likelihood of price actually just going all the way straight to the stop loss before you can do something about it, is very unlikely for that to happen, then you know that most of the time you're going to either have your profit targets hit or you're just going to break even. Worst case scenario most of the time. If I keep adding at this zone down here, my position average will be right in the middle. If I add again down here with a little bit of a multiplier, so a little bit of a heavier lot size, right now the position's one standard lot. When it comes down to here, I'll probably add one standard lot. My position average will be right in the middle of where I added both positions. When it comes down here, I might add two standard lots. Now again, this does increase the risk. However, I'm betting on the fact that most likely price is going to bounce somewhere most of the time. Every support resistance level has about a 50% chance of breaking or bouncing in my experience. I've had some clients say this number is a little bit higher. I've had some clients say it's a little bit less. What I've seen, based on my data and the data of having thousands of my clients also do the same thing, is that it's somewhere around 50-50. And that's okay, because the amount of times price would have to move in one direction without bouncing at a single zone ever, this is like, it happens obviously, but it's just very unlikely. And you can also sort of read the writing on the wall per se if you have experience trading, knowing when price is likely just to continue cascading in one direction, whether that's up or down. And then you can manage trades and just get out of trades like that looks like they're just not going to come back. However, most of the time price eventually bounces somewhere, and then most of the time you can get out in a profitable or a break-even scenario. The only year that I was profitable every single month was 2022. It was an absolutely crazy year. It was a year that baffled me because it was the only year that I didn't actually really try to predict price. I was using, if you guys go back to my YouTube channel videos in 2022, I was essentially using a hedging approach where I also incorporated concepts of like dollar cost averaging, grid trading with a slight multiplier, and then kind of like a pseudo semi martingale approach. Like portion of that had like a sort of a taste of martingale, but it wasn't like as straightforward and risky as exponentially just doubling your bet on each trade. It wasn't like that, but it had characteristics of that, and it was all kind of sculpted to account for whatever the specific trading opportunity was. So that said, if I add as price continues going down and it bounces anywhere this week, the final outcome you will see at the end of this week, probably when I do the recap. But the final outcome will probably be either a profitable scenario or a break-even scenario. Let's see what happens. Now, Euro GBP, I've sold here at a resistance zone, and my plan is to take profit if it comes here to the bottom of this range. I might extend this profit a little bit more to this previous low. If we start approaching this zone with very, very big candles, that would be very nice. I don't know if that's going to happen though, so I think I'm going to do is set an alert under this zone. If we can break this with big candles, I might just extend my target lower. And then if we keep going very fast down here, I might just extend it to a lower low. So then the profit could be something like down there. So we'll see what happens. The hard stop for this position right now, I'm sized really small. The risk is low. It allows me to manage this trade to get out at break even or a profit without worrying about the risk threshold because it's sized so low. It's all the way up here. So, I mean, this gives me the chance for price to go up a little bit first before come down, or it gives me the chance for price to even go all the way up to this next resistance zone. And then I can add here both at the bottom of the zone and towards the top of the zone around the previous highs. And it allows price to even go a little bit past that before falling. Now, if I have to add when price goes up, yes, that will increase the risk. However, the likelihood of it bouncing somewhere, especially on a really rangy pair like Euro GBP, it gives me plenty of chances to get out. And right now we don't really have a trending market. We just kind of have a range. So I think at some point it's likely to bounce somewhere and come back down. We'll see what the outcome is at the end of this week in the recap video to this. It's probably going to be a profitable or break-even scenario. AUD USD is essentially sort of the same kind of general outline of Euro GBP. However, I would sort of give this a little bit more credence and say maybe it's in a downtrend. However, even if it wasn't, none of that matters. What's the reason for this trade in the management plan? I've simply sold at resistance. I've got a target here at the previous low. And if price breaks above this zone, I have so many chances to manage it. It can go up here. It can pull back, break and retest. It can come retest this zone, and I can close this at break even. And then I can add a buy with a stop way down here and then a target up the next zone. And then if it continues up to this next zone, I can take profit on that buy and then add a sell. Then if it bounces there, I'll make profit on the sell. And even if these don't work out that well and it just runs straight up to the zone after it breaks without even retesting, it just continues running up here, well, it's no big deal. I've used a position size small enough to allow myself to account for that, where I can just add in here around the highs. I could even add up in here again around these extreme highs. And if I just get a little bit of a bounce with a little bit of a multiplier, price only has to have a tiny bounce away from this zone for me to be able to break even or even make a small profit. So we will see how AUD USD goes at the end of the week. That's my trade. That's my entry. That's my management plan. That's how I've structured this. USD CAD I've bought because I think currently price is trying to go up in sort of an uptrend. We've had price hit this resistance zone over and over, and we've had a bunch of higher lows. I just think price is likely to go and make a higher high. What I'll probably end up doing around market open is adjusting my profit target to up here. I just think price is likely to make a higher high. So I'll probably end up doing that. If anything, I'll just see what price action looks like if it starts going up at all, and then I'll be able to sort of manage that as it goes up. If that doesn't happen, what I'm going to be looking to do is potentially adding a position here. I think I might wait for a bounce first, since this zone doesn't really look the clearest to me. However, I may be adding a position there if price gets there. But if not, I will most likely for sure be adding a position right here at these lows, most likely. Just because I think, if we have a nice move back down here and she doesn't stop anywhere, that will give me time. If I add right there, right, I can add to the position there. That'll move my position average from up here. If I just use the same lot size down to like right here in the middle, right? Then if price just bounces that far, I can get out of all of this at a break even, and it wasn't a losing trade. And I still was right about a bounce somewhere. Even though I was wrong first, I just don't have to take a stop out on it, so it doesn't result in a losing trade. It just results in a trade that ended in either break even or profitable, whilst assuming a little bit of additional risk and still betting that the probabilities will allow the whole system to work and function and play out. Again, this literally like a whole year of doing this, almost a whole, probably 8 months that I was actually using the hedging in 2022. But that whole time, it was just like there was zero predicting the market. The risk structure is the only thing that made me profitable. And it was baffling at how well it worked when there was literally zero edge. The only edge, if you would even call it that, was the fact that I just had this similar risk structure. I obviously can't do it the same way. I'm with forex.com right now, and they do not allow hedge mode on forex.com. It's against U.S. regulations to be able to hedge. So I have to do this in a little bit more creative way, using essentially dollar cost averaging and kind of a pseudo grid, pseudo martingale approach with a multiplier if price goes against me, and still using hard stops. And like worst case scenario, I have to get out of a trade. And I've got plenty of bankroll to continue doing this. So even if I get myself into a pickle, as long as price bounces somewhere, which it does every time, it bounces eventually somewhere, unless every candle just goes straight up or straight down forever, then I would, probably blow the account. Has that ever happened though? Has there ever been nothing but bull candles and there's been no pullbacks on any asset? You can be the judge. You can scroll through market history and forex and crypto and everything and tell me if that's ever happened. So again, it could happen, and there's more context as to how I could really take a big loss or blow the account. But I did this over and over back in 2022, and it's just seemed to work better than literally anything else I'd ever done. So with that said, this is kind of my management plan and my reasons for taking USD CAD. Let's get in here to Euro AUD. I think price is going to go down, from as evidenced by this arrow. Here's why I think it's going to go down. Price has pushed up. We've been trying to make all these higher lows and go up from here over and over. But for some reason, it feels like price is failing to get past these highs, and price couldn't even get all the way to this previous, more recent big high. So what that makes me think is that since price continues to fail to go higher, and price has come here to these lows, and it's just tried to bounce over and over, but it's kind of like failing. There's lower highs and there's lower lows. it just makes me think that, all right, price is really struggling to bounce here. It just looks like it's more likely it's just going to fall through this zone and break. So I'm anticipating on a break of this zone. If it does, I may or may not be adding to this. I'm not sure. We'll have to see. I would have to be able to drag my invalidation lower, but then there's a higher risk of the invalidation actually hitting. So it's just one of those things you kind of have to decide in the moment. For now, my stop is all the way up here. This gives me plenty of room to manage this. Should it go to the next zone and start bouncing, just add another sell right there. It goes higher up above this high, cool, I could just add another sell right there. And the position average is like up here at that point. I would only need a tiny bounce to just get out of that at break even. So if half the trades win, I get half my trades instantly going to profit. If the other like half, or at least the other like, let's say 45%, are end in like break evens or small profits or small losses, that's like 95 to 99% of my trades ending in a good outcome. And then like 1% of the time, like, right, maybe a little bit more, maybe a little bit less, but a very small percentage of the time, things just really trash and go the side and they wipe out like a few winning trades. But that doesn't happen very often, fortunately. And also when that is happening, I have enough experience to a good chunk of the time kind of read the writing on the walls and just cut trades out at a loss before they become bigger. So it's a lot of experience. There's a lot of dynamics, nuances, subtleties, and context that applies to it. But it's just a skill set that I've developed having done this same thing for the past, it's been almost 8 years. I can't believe it's been almost 8 years. Next month it'll be 8 years. So if price does go up to one of these zones, I can just add, and if it bounces somewhere, I'll make a profit. Even if it goes and slightly like spikes above this zone, right? Say we have a spike above the zone. Normally there's a retest after that. And if price comes back, I'll be able to just probably liquidate all my trades there at a little bit smaller of a loss. It'll still be a loss, right? Because my position average, if I add at these zones, will be like up here. But even with that, like, let's say that could be like a $2,000 to $3,000 loss, and then I could just buy, and then if it bounces there at that zone and continues up, and then I'll make back, maybe a portion of what I lost, or maybe even all of what I lost. We'll just kind of have to see what happens. If you'll notice, I spent a lot of time thinking about what could go wrong on this trade and what the risk would be, right? Everything I've just showed you, I spent a lot of time going into the details and nuances about, hey, here's all the shit that could really go wrong and go south in this trade, and this is how I'm going to manage it, and this is what my management plan is. If you'll notice, I spent almost no time thinking about what if it goes right. Why? Because there's nothing, if it starts going right, there's nothing to do. There's no actions that need to be taken. If it goes right, it'll go to the profit target. Price will come into this little next zone right here, and I'll have my profit target hit. And the profit target is very modest and very likely to hit if price hasn't moved down. So what really matters, again, like there's a quote by some investor that I can't remember who it was. They essentially said like people will be better off focusing more on like not losing money than they would be focusing on trying to make money. So it's like if you focus on like, let me just figure out like, controlling risk and like trying to not lose all my money. The insinuation is that you're better off focusing on that as compared to, and in opposition to, trying to focus on how much money can you make? How much can you win? How much can you succeed, right? You only succeed in trading by failing well. If you've ever read the book Best Loser Wins by Tom Hugard, the whole book is about this. The whole book is literally about how to be a good loser. If you can manage risk well and you can structure things, there's a lot of points he made that I really agree with, that I've kind of noticed in my personal experience trading the past 8 years, that dictates that it's more important to focus on risk structuring and risk control as compared to what your profits are. So that's why oftentimes you see me focus way more on what can go wrong and how can I manage it, and am I positioning myself well if that happens, as compared to focusing on like, if it goes right, let's talk about 90% of the conversation about what would happen if it goes right. That's why I just typically focus more on what can go wrong. You preserve your capital that way. GBP AUD, it's a trade I'm in, trade I've been in since last week. I still think price is likely to go up because I still see that for now we're in an uptrend, albeit a rangy uptrend now, but we're still doing higher highs and higher lows. I think that at any moment price could just spike up and go up here, hit the target, potentially even make a higher high, which is something I might consider extending my profit target higher if it goes up. If that doesn't happen and we go down here into the support zone, I will be adding. It's like a support resistance zone, and it's also kind of convenient. It's right here around 1.92. I don't know, there's like this whole logic and theory about like round numbers. I don't really look at it too much. I just look at what does it look like on the chart where prices bounce. Here, prices bounced as resistance, and then if you extend it in the future, price had bounced here support twice. The price comes down in here, probably going to be adding right there. If I add right there one standard lot, that'll increase my risk from $3,000 to $6,000. That is the worst case scenario if it continues to go against me. However, what that would also do is if I add the same position size there, which is about one standard lot, this is 1.1 lots. I'll do a small position first to see what the sizing is, and then I'll set up the stop and target and everything. And then what I'll do is I will add to the position until it reflects the amount of risk I'm comfortable with. So if I add down here, right, the position average is up here right now. If I add down here, position average comes to essentially current market price. So if that happens, right, I have two options if it starts to bounce after I add. I can close at break even, or I can, if I'm watching the price action and think it's likely to continue further up, I can just hold the position. And now if it goes up, now I'm making more profit than I would have made in the first place from essentially the same outcome. So that is what that is what I think could happen, and that's my management plan if something doesn't happen. There's also the potential that it could just spike up, the first day or two of the week and just go to the profit target. And if that happens, cool. The rest of these pairs I won't spend a lot of time on right now just because I don't really have anything. I've looked at all these. I just don't personally see anything. There's obviously, there could be good trades I'm missing out on. I might be missing out on good buys on Canadian dollar, Japanese yen because it's in a good uptrend. I might be missing out on sells because EU's in a downtrend, but then of course I'm short on AU, which is almost the same thing. Maybe I could be missing out on a lot of stuff, but that's okay. If I don't see anything personally, my intuition doesn't tell me that something's there to trade. I typically have found better results just not trading it. Lastly, we will look at crypto. I do have quite a bit of crypto right now in a Ledger wallet. So there's Bitcoin right here. Price has gone up quite a bit. Off the lows from the first impulse and then crash, we're up about 35%, about 35%. It's doing very good. What do I think is going to happen? Obviously, I think it's going to continue trying to go higher. Just my opinion. Algorand UST, we've had a big dip, had a huge spike up, had a huge dip of like 40%, but now Algo is back up about 30%. So I have Bitcoin and Algo. So those assets or those tokens I think are going to go up. So there's a bunch of different reasons people would give. For me, it's just mostly having watched the crypto market for like the past few years and just seeing the same thing happen over and over. So with that said, that's what I'm looking for this week. This is a little bit more of a long-winded video, but again, the purpose that I could do all this analysis I just showed you in this video in like, I think 3 minutes, maybe like 2, 3, 4 minutes. Having to explain it, and not only that, but having to explain it in a way that I believe most people could understand and find valuable is a whole nother different skill set that I've had to get better at doing over time. So if you like this and it was helpful, good for you. If it's not, you're probably better off just going and getting experience trading on your own, because that's how you learn any skill set, not just trading. You just go and get the experience on your own. I hope that my content can be a tool to just kind of help nudge you in the right direction. And if you'd like to follow all of my trades live, you can join the MFX Close Friends group. This is a group where I call all my trades live in real time. I put whenever I'm entering, I put where I'm closing, I put the full analysis, the explanations, I show my charts, I show my terminal, I show the recaps, I show literally everything in here. And I've done this specific group for almost 2 years now. It's been like, I guess closer to a year and a half I've been running this group. And it's been great. It's been a fun experience. It's been a fun journey. You can ask me anything. We have a dedicated channel in here where you can ask me anything. There's a main chat where we can talk about, whatever we talk about. It's a lot of fun. We have a lot of different perspectives in here. We have a lot of people sharing a lot of cool stuff. We have pictures of Lamborghinis. What is that? No, that's like what, Koenigsegg's or whatever. But yeah, so it's a really fun group. If you want extra help and you want to be doing like live Zoom group sessions with us every day around 7 a.m. Central Standard Time, you want to be able to literally ask me anything, anytime, 24/7, get a response from me. You want to be able to follow my daily analysis. This is just a community that could help potentially speed up the learning curve significantly for when you get profitable. Keep in mind, most people do not get profitable trading. It is insanely difficult, just like any high-level skill set. that generates tons of income. It is something that really takes a ton of work, and most people simply aren't able to persistently do that in such a way where they're going to get profitable. However, if you're in a position where you want to take your trading journey seriously and you want to have the support of a thriving community where it's not only useful, but it's also fun, Mission FX is a great location to do that. So consider joining the MFX Close Friends group. If you click the first link in the description, it will take you to my website, and on my website you will be able to see this page right here, and you can click the MFX Close Friends group right here. If you click that, it takes you to a page. I made this little video about how it all works. I got everything in writing right here so that we can see how it all works and everything. And then you can subscribe. It's $250 a month, and you can cancel anytime. It automatically charges, so just keep that in mind. If you want to cancel, you just message me in Discord, after you're a member. You'll be able to cancel it at any time. So there's like no commitment, no nothing. You can literally just try it out for a month if you want. But that's it. That's all I've got for you guys today. If you enjoyed this video, feel free to do whatever you want. And I hope you have a great trading week, and I'll see you in tomorrow's video.